Hi, everyone. I'm Bassem Michael with Michael and Company CPAs and onlyfordentists.com. Today, we're going to be having a great discussion with a good friend of mine, Vijay Sikka. Vijay is the guru, I think, and his company and his team are gurus when it comes to dental practice data analytics. They were really the ones that really started this whole industry, I think, one of the pioneers in this industry when it comes to analytics. And we're gonna have a discussion today about the practice data and what they saw in terms of trends during the pandemic, and then also as we recover from this. And then later on, we're going to be going over the EIDL loans and also the PPP loan updates. With that, I am honored again to have Vijay with us here today. Vijay, welcome.
Thank you, Basim. It's a pleasure to be here.
The pleasure is mine, and I know you're very busy, and I'm just honored that you're here with us today. Vijay, before we start with jumping into the data analysis, I wanted you to tell everyone about Sikka software. Of course, a lot of dentists use Sikka software every day. But just give us a brief overview about what is Sikka software and what it does.
Thanks, Basim. So I am a dedicated dental spouse, DDS. I have spent close to 30 years here in the Bay Area. My wife is a dentist, and that's how I started becoming interested in the dental industry. Approximately 20 years ago, she bought a practice, and I helped her out setting up the business processes and fee schedules and everything else. And so my background is artificial intelligence, neural networks. I've started 2 companies before this. Today, Sikka software is, and as Basim said in his kind introduction, we literally established the practice analytics, business intelligence dashboards category in the dental industry. And we have the largest number of installations of an independent small company. We are at 35,000 total installations of our software and 28,000 in dental. And we are focused on providing the dentists with the best of class tools, such as reputation management, revenue cycle, acceleration, patient payments, practice payments, which is becoming very important in today's social distancing environment. And that's a very, very quick introduction to Sikka software and myself, Basim.
Well, thank you, Vijay. Now, how did the idea of starting this company come to you?
Very, very good question. So as I mentioned, so I had sold my second company. I was actually semi-retired, had bought a house in Morgan Hill, and my wife jumped into having her own practice. And I worked in her office for 2 years. Didn't get paid. I was there to help her out, and realized that when it comes to setting fee schedules, she was struggling. The business is, you need to figure out how to set your fees so that you can be the most profitable. Mm-hmm. And I explained that to her, and that is really where Fee Schedule Optimizer, our first application, came out. Because the idea of fee schedule optimization is dependent on how you practice, the frequency, revenue, time units, and what your neighborhood is charging. Instead of making a guess, like throwing a dart at a dartboard, you want to figure out exactly how much the fee schedule is profitable for you. And that's really how we build the Fee Optimizer, which is able to connect with all practice management systems, whether it's Dentrix and Softent and EagleSoft and Easy Dental and Mogo, you name it, over 400 of them. and automatically connects to it, automatically reads the data, and is able to analyze fee schedules for you. So that's how I got started.
Wow. Um, so, and it's amazing. When a software is developed um, by someone that is actually using it, and someone who's an end user, because I think they really started with a better understanding of what the user really wants and needs. Um, so I understand that you have a presentation here for us to show us, what happened to production during the lockdown period, and then how are we coming out of this?
Absolutely. So, Basim, as you know, dental industry, because of the shelter-in-place order, was one of the worst hit in terms of the catastrophic drop in production. So, 85% of our customer base lost. The revenue basically dropped to something like 20% of what it usually is, and that was a fairly strong shock. So we jumped into action because working with our customer base, we built this website which would be all opt-in practices which were actually reporting the production and the visits because during the COVID. And now we are starting to see incredible results. And this website is available for everybody, and it is available completely free. It's right on our homepage, sikkasoft.com. And I will actually show you a few things around that. So on the screen right now, you see the current install base of Sikka software. These are all practices. This is a heat map of all practices in the US and Canada, which have our platform, Sikka platform, installed because they use the Sikka platform through our marketplace to get best applications for reputation management, revenue cycle, for patient performance management, for patient communications, for business performance management, and also marketing, patient payments, practice financing like Wells Fargo is now using our platform for all the new practice financing opportunities within the dental and veterinary, and they are piloting that across the board for that. And then we work with payment companies, which are enabling your patient to pay you from anywhere using a mobile phone, for example, without having to worry about integrating it back into or rewriting back into the practice because it's fully integrated. So these are all the installations that we currently have. And you can see how the population distribution of the United States completely corresponds to the number of installations. We are really proud of it. We also have installations in Canada. Canada is, of course, much more sparser populated. Sure. Now, on our website, and the website address is right here, sikkasoft.com, COVID-19 rebound.html, you can actually see week by week graph on production and patient visits. As COVID hit, you can see how it was a catastrophic drop, and then it continued on, and then slowly the US production has actually picked up. This is Memorial Day weekend dip. And you can actually then see that we are almost at around 88% of normal.
Yeah.
And this is very significant because there has never been a recovery like this. And Basim, you and I were speaking about this, of how comparing it to the 2008 financial crisis, right? The COVID-induced financial crisis is very different from the 2008 financial crisis, for example. And we compared different states, and you can see all the states in your graphs. For example, if you visit the website, you can see how California, New York, and Texas. So Texas was the first to open, and you can see how Texas graph, the purple bar here, just went up. And this is, again, like I said, production and visits. And then you see California, which was the second to open after Texas, about a couple of weeks after. And then New York was the last one to open, and see how fast New York is coming back, trying to come back to normal, right? So you can see some amazing graphs if you visit that website. And then we also have other capabilities where we can start to give you predictive analytics. So this is New York, and we can tell you exactly when New York, so on the week of, right around July 11th, New York will reach back to the average normal levels, pre-COVID levels. Let me put it this way. So this is an interesting, chart. I'm going to pause there, see Basim if there's any question or thought.
Oh, this is really great, Vijay. Now, is it safe to say that as dentistry recovers, so will the U.S. economy?
Actually, I did a webinar with ADA, and this is, we were discussing this. Absolutely. Actually, dentistry is a very significant indicator of the economic health of the country. And the reason is, and I'm actually going to deviate a little bit from this graph here, but I want to share with you a couple of things. So preventative procedures, diagnostic procedures, and hygiene procedures, for example, restorative procedures, indicate consumer confidence. So if a patient shows up for a hygiene appointment, then you know that they have a job, they have an insurance, and they have confidence about making the next appointment. And that actually is consumer confidence. And if you think about it, it's a forward indicator of U.S. economy.
So although the chart here, because we're looking at we're zooming in at a period of time, it looks like a U shaped. But if we were to kind of zoom out and maybe look at a period of 3 years, this would really look like a V-shaped curve.
Close to it, you're right, or at least very, very tight U. Yes.
Yeah. Because I remember, even maybe 6 weeks ago, there were people discussing, is the recovery going to be a V-shaped or a U-shaped recovery? Now, what makes you attribute, this quick recovery to? What I mean, it's amazing. I mean, when you look at the stock market, when you look at unemployment, when it's recovering so quickly, thankfully. 2 months ago, or maybe 10 weeks ago, the picture was really bad. In mid-April, we're at our peak, and we're reporting a high number of deaths and extreme number of new cases, why do you think this recovery is happening so quickly? Thankfully.
Well, that's an excellent question. In my opinion, there are a few contributing factors. So first of all, identifying dentistry as a non-essential was probably not a good idea, because when you have a toothache or when you need your dental treatment, you're not going to go to the emergency and expose yourself to unnecessary, COVID situation, for example. And so people were really unhappy. I remember the early days when I could see that the dentists were torn and the team members were torn, that they are not able to service and help their patients. And the patients were calling incredible number of times just saying, what do I do, doctor? You're my doctor. How do I, get assistance when I need this dental treatment? So from my perspective, there was, and when we saw this in numbers, we are a data company, we are a numbers company. And so we were able to see this in opt-in consent-based practices, which were reporting that there was a pent-up demand. We continued to see endo procedures being done. We continue to see some of the emergency-related procedures being done. And then as the things started to come back to normal, we saw spikes in implants, in orthodontic procedures, and many of those things. But the good news is that we are now seeing a nice broad-based increase in restorative procedures, in preventative and hygiene-oriented procedures, which is actually a sign that it is not just a pent-up demand being serviced now, but it is more normal. You see what I'm saying?
Right.
So things are starting to become more normal. And by the way, on our website,
old normal, not the new normal.
exactly. I know. It is one of those things where I don't know what normal is going to be, but it is good to see most of the indicators starting to come back. On our website, on the COVID website that I was talking about, we actually can show you by different procedure functional categories by state and how each one of those is starting to shape up. And you will be able to see how, when I say restorative and preventative are starting to come within 6%, 5% of pre-COVID levels. Pre-COVID levels being, somewhere in the March, February, March timeframe.
Probably, yeah. Vijay?
Yeah, I'm still here. Yes. So that is, I mean, in my opinion, the recovery is because initially there was a pent-up demand, but now we are starting to see that dentistry is an essential component of people's lives. And if you look at it, dentists have taken extreme action to actually get to get the PPEs, to get, some of them are, for example, have negative pressure rooms now. They are using HEPA filters, which with very advanced, ultraviolet lights to make sure that the virus is killed. And so I'm starting to see a lot of effort that dental professionals and team members are putting in to make sure that their practices are safe and they're doing their best to go with all the guidelines for infection control. And so that's an excellent thing from a patient's perspective, with social distancing, parking lot waiting areas, parking lot payments, all of those things are still facilitating a good interaction and we are starting to see a healthy rebound in this industry.
Does your app also allow for patients to remotely answer the patient questionnaire?
Oh yeah, we have a teledentistry application, and it's actually free, and it allows you to have chat, which is secure, video as well as audio chat, and then it also has we are launching continuous improvements in our program for remote form filling, feedback forms and intake forms, and of course payments. Nobody wants to be handing credit cards, and because then you are trying to figure out how to make sure that everything is going touchless, and
Right.
so payments are the first ones to also be affected, and we offer payment solutions which is fully integrated with the practice. So when a patient pays, they know the amount they have to pay, and it automatically gets entered into the practice management system.
Great. There's always talk also of there's a possibility in the fall or winter for COVID to rebound or come back in a second wave. Do you think we'll be better prepared the second time around if it comes back?
I think personally, I have a mixed feeling about this. First of all, I share your concern that COVID might make a comeback. We are hearing, it's making a resurgence in China, for example, in New Zealand, which had thought that it has completely eliminated. There are new clusters, and there could be a second wave, and that's a concern. I do think that dental industry is very well prepared now. Of course, if the PPEs and others go in short supply, then we could see a disruption. But other than that, I can see that dental industry has done a lot and I'm sharing this anecdotally because I've seen my wife's practice,
Right.
Go through a full analysis And I wouldn't have thought that a dental practice would have negative pressure rooms. You know what negative pressure rooms are, right? Like operating theaters
Right.
are negative pressure rooms, because what they do is they circulate the air and pull out everything very quickly. There's a very finite amount of time, and this is now we're starting to be found in dental practices, which are actually creating negative pressure rooms, which are very safe, so that any airborne particles, particularly because there's a lot of aerosolized particle situation in dental offices. Then there is extraoral suctions that dental offices have procured, and these extraoral suctions also reduce the aerosolized particles. There is temperature checking, there is COVID checking, and all that. So dental offices have spent a lot of effort in preparing for helping, reduce the chances of infection.
Wonderful. Yeah, and maybe also, in case there is a second wave, which again, I agree with you. I think we are going to be better prepared this time, because let's face it, no one would have predicted that the whole world would be shut down
Yeah.
over a 2 months or 10-week period. But I think over the next year and a half, we are gonna continue to see supply chain supply chain disruptions,
Mm-hmm.
not just in dentistry but throughout the economy. I think that's going to be the case, and I would probably strongly encourage people in any industry to pay close attention to their supply chain and make sure that that is secure. If you normally had 2 weeks worth of supplies, I would do 4 or 6 weeks, but I wouldn't go crazy and do 6 months, because we also know that the prices are inflated right now. And then the other thing is cash. I would we've always preached to our clients to maintain a 60-day operating cash on hand. And I would sometimes get some resistance from clients. Why do I need to have a couple $100,000 in my bank accounts just sitting doing nothing? And let me tell you, those same people that used to criticize me for that, they came back and said, you know what, this was definitely a lifesaver. And we were able to sleep at night much better, knowing that we have that cash cushion. So I definitely think in situations, especially the situation that we're in, the demand was artificially disrupted because of the shutdown. But I think the real threat is going to be the supply chain disruption.
Agreed.
So I see here that you have a slide about how does this crisis compare to the Great Recession. So tell us more about it.
Yeah, absolutely. So this is a very, many people ask me, how does COVID-19, economic crisis, COVID-19 introduced or induced economic crisis compares to the Great Recession. Now, please understand, Great Recession is the 2008 financial crisis that's being called the Great Recession. The Great Depression was the 1913.
30s,
that's different. So the 2008 financial crisis, what you can see here in these graphs is 2007, 8, and 9 average production data for Sikka software customers. Now you will see these notches. These notches are holidays. So you can see Memorial Day, weekend, and then you will see Labor Day, Independence Day, then Labor Day, and then Thanksgiving, and then Christmas. So, and what this shows you is how 2007 to 2008 and 2009 behaved. Notice, first of all, the dental production in 2020, this is the red line here, is 40% higher than what it was in 2008. So in the last 12 years, dental industry has done a fantastic job at growing, which is great. Right. The second thing I want you to notice is that 2008 recession had no perceptible effect on the dental industry from a production perspective. And practices continued to perform okay from 2008 to 2009. The growth was not very strong,
Right.
partially due to the recession. But compare that to 2020 COVID-induced recession, and you will see how active, first of all, how strong a drop there was, and then how quickly the country has rebounded. By the way, the data that I'm showing you here is most recent data as of this week, right? So this is data that's not available from anywhere. This is not survey data. This is actual empirical data.
Yeah, that's amazing. Vijay, I have a question here from one of our attendees. He's saying while the dental industry is recovering, patients are still very nervous to see their dentist. How come your data does not indicate that? Most of dental offices we know of in the Bay Area are only operating half of their normal capacity. Their production is only 50% of the normal. This is because COVID's requirements, such as limiting number of patients, more time needed for disinfection between patients' visits. Thank you. I don't know. I mean, maybe I'll answer that. Maybe also you could chime in. But
sure.
You know, I'm on the phone with my clients all the time, and I would say we've got some offices that are at or close to 100%.
Yep.
And some offices have even added more days just to catch up because there's such pent-up demand.
Yep.
But I would say, I don't think on average we're you know, what we're seeing from, and we only have like maybe a couple hundred offices that we look at. We're seeing we're probably, the average would have to be above 80%, I think, at this point.
I know offices which are booked through August. I mean, this is, we are seeing, so yes, it is correct that social distancing, appointments, spacing, all of those things are being followed by practices, but practices are also, you know, making sure that the appointments they make are the most productive. And they're also making sure that, and they're busy. The ones which we know are busy. And so this graph doesn't mean that it has yet reached 100% or pre-COVID levels, right? It is, this is the most recent data, and it's approaching around 88%, 88 or so percent of that. We don't know what the future will bring, but as of right now, we are seeing practices get very busy.
Right. And like I said, I mean, we've got some offices that are adding days or extending hours because patients, you know, now, of course, there are a few patients that are nervous, but you know, and also, you know, another contributing factor is that, and this is where your data, I think, was very helpful to look at during the shutdown, because we've seen a lot of smaller practices completely shut down during the second part of March, April, and some didn't even reopen until June.
Yeah.
And, you know, in looking at your data that you guys were putting out every week, I was telling my clients, hey, you know, you're not doing yourself any favor or your patients by completely shutting down.
Yeah.
You need to be at least, you know, treating those emergency cases. And again, it was a much more convincing discussion when I showed your data, because I remember in late March, early April, the average production was for a smaller office was around 20%, and for the DSOs was around 35 or 40%, right?
That's right. We saw DSOs were operating, exactly.
Yeah, and again, we saw that some of our larger offices were close to 40 and 50%, because not only were they seeing their own patients, but they were also, you know, picking up new patients that were not being seen by their existing dentists.
About 15,000 practices are represented in this data that I'm sharing with you, which is the largest of it. There is nothing like this in terms of data. And this is the most accurate because it's coming straight from the practices. And these are all opt-in consent-based practices. And about 15 to 20% of those practices are DSO practices. So you can actually see within, like Basim, you mentioned, on our website, we also show you how the DSOs are doing. And for a solo practitioner to be able to compare how they are doing and how the DSOs are doing is a great opportunity to look at best practices in many cases. In some cases, solo practitioners are doing better, but during those periods, for example, when emergencies and others were not being seen by solo practitioners, DSOs were actually tracking higher
Mm-hmm.
production.
Yeah. Um, and again, I mean, from the numbers we're seeing, those practices that were open during the shutdown to see emergencies recovered way faster than practices that were completely shut down and did not reopen until the first or second week of June.
That's right. That's right.
Just because now they still have to go through the exercise of getting used to the new protocols, and it just takes time. But yeah, no, I think that 50% of normal is too low, and it's not really represented by the data we're seeing, both
Yeah.
from Sikka and then from our own clients.
Yep. And I had this interesting thought process, Basim. I don't know if this is the right time to talk about it, but what changes are now in place for patients for when they visit the dentist's office? And I just wanted to quickly summarize. Of course, we are not infection control specialists. We are more of a data company, but there are new protocols and procedures for patient visits. Cleaning and disinfecting is adding some time, and new processes require some staff training and patient education. Curbside waiting room and remote check-in have become normal. Pre-screening questionnaire and temperature check is required of every patient. As I mentioned, there is extraoral suctions. There's lots of equipment which dental offices have invested in. No front desk. Front desks are starting to take a different shape now. Payments has to change. For example, how you take payments is starting to change. So we are starting to see a lot of, and we are offering many tools and applications which enable people, for example, self-service options for patients through mobile applications, through websites, and SMS, text to pay, web pay, things like that. So there are some changes that are happening. We noticed teledentistry has actually went up, because of COVID. Of course, it's not going to replace the dental visit, but it is going to supplement the patient care portion of it.
That's great. And do you think, Vijay, also the fact that we had the stimulus, both for the consumers and the PPP loans, and the EIDL loans, do you think that helped also for a faster recovery? Because now most offices were able to take advantage of the PPP, and maybe they were less nervous about bringing back their staff. Because they have the money and they have the incentive to spend it.
I know Michael and company, for example, Basim, your team was very active in helping practices through the PPP application process. And I personally believe that it tremendously influenced in a positive manner the industry. And, dental practices were of course, able to benefit from it and stay open, right? For example, keep the doors open. Team members, one of the things that happened was that the entire concept of team members who who were furloughed and or who were in some ways they may not have a lot of incentive to come back. So keeping the practices open, keeping the team members engaged was a very, very good thing that happened, and it was influenced by the PPP.
Mm-hmm.
And then of course the extension of PPP payback has also been tremendous, because many practices were not open, especially in the dental practice world,
Right.
as you know. And once the shelter-in-place orders lifted, then they were able to rehire their team members or bring their team members, to start to work. And so this extension, which has come recently, which was a fantastic benefit to most practices also.
Yeah, absolutely. And it's not just going to help, practices only, but, even restaurants, which were very hard hit,
Yeah.
are going to benefit from this. And a lot of retail is going to benefit from this. And as you know, in an economy, we all depend on each other. So the general health of the economy will affect, I think, dentistry. Although again, people are not going to put off a visit if they have a toothache, even if they don't have the money. They're going to figure out a way to get their money and see a dentist. So with that, is there anything else you wanted to add before we jump into the SBA loans and the latest updates?
No, I only want to say one quick thing, that small businesses is really what drives our, American economy.
Right.
And 170 billion dollars is the size of dental services market. Of
Wow.
course, we also work with veterinarians and optometrists and chiropractors and orthodontists, and those are additional segments. So, in my opinion, the service that the dental industry is providing to patients, as well as the benefits it causes economy, is just incredible. And I think it is essential service in every possible way.
Absolutely. Absolutely. Well, with that, we're going to switch gears, and this was a perfect transition to the EIDL update, and also the PPP Flexibility Act, Program Flexibility Act updates. So as far as the EIDL, for a while the money ran out, and the SBA was only taking applications from ag businesses. I think starting this week, they reopened the portal for taking new EIDL applications. So if you haven't received or you haven't applied for your EIDL loan and EIDL advance, you could go back this week and apply for those as soon as possible before the money runs out again. What we've seen is initially the SBA was giving pretty generous SBA loans for the disaster relief loans. And then as their money started running out, they basically capped it at $150,000. Congress told them, I think, that the cap was going to be around 10 million, but it was capped at or 2 million, but it was capped at 150 so that they can spread the love to everybody. Some of the loan documents that we're seeing from the EIDL loans, it shows that they give you, first of all, they give you about 60 days to sign the loan documents. So once you answer the questionnaire and you do all the things that are required for approval, they send you the loan docs. You have 60 days to sign the loan docs. Just make sure your loan docs say that. And what we're advising people is that since we're still in a period of uncertainty, the EIDL loan, even if you don't need it, looks attractive right now. At 30-year term at a 3.75% interest rate. I would at least go through the process, get approved, get the loan docs. Don't sign it for a month or two, but I would, before that 2-month period runs out, I would actually get the funds, park it in my bank account, and see if I need it. But if by the end of the year you don't need it, then you could pay back that loan. But I would definitely get my hands on that money, even if you don't need it, and I would just leave it in my bank account. You cannot use the money to refinance any debt. So the money has to be used for operations or maybe buying equipment or paying for upgrades. So what we're advising people to do is maybe separate their own company money in a separate bank account from the SBA money, so that this way you could do whatever you want to do with your own money, or the money that was earned by your company or your practice. You could use that to pay off debt, do whatever you want. But with the government money and the SBA money, I would just follow the directions that they gave you in those loan documents and loan covenants. So that's what I have to say about the EIDL. With regards to the Paycheck Protection Program Flexibility Act, which was passed by Congress a couple of weeks ago and signed by the president, we didn't really get a whole lot of new guidance from the SBA in terms of how it will be implemented. But the general consensus that we're hearing and that we see, and we also saw the Congress do a hearing last week with Mnuchin, Secretary Mnuchin, and the SBA director. The general consensus that we see is that the government wants to help small businesses that got the PPP loan get those loans forgiven. And I would also guess that the banks that issued those loans want to also get those loans forgiven because they probably don't want to carry these loans on their books at 1% for too long. So let me just briefly go through what this new law, the PPP Flexibility Act, does. Number one, it extends the covered period for loan forgiveness from 8 weeks to 24 weeks from the date of the loan disbursement. Of course, borrowers who received the PPP loan before this law was passed can elect to still use the 8 weeks. It's going to be hard to see anyone that will benefit from only using the 8 weeks. And I would guess that the majority of people will probably go for the 24-week period. Because if you remember, the loan was based on 2.5 months worth of payroll. And the covered period was only 2 months. And for most people, payroll is the biggest expense. And it's hard to spend 25% of the loan proceeds on rent and interest and utilities in 8 weeks. So I would say, I think for the majority of practices and the majority of small businesses, they're going to maximize their loan forgiveness if they opt for the 24-week period, covered period. It also lowered the requirement that 70% of the borrower's loan proceeds must be used for payroll to 60%. Now, again, if you elect for the 24-week period, I have a feeling over a period of 24 weeks, you're gonna more than use 100% of the proceeds on payroll. So the good news about that, if you use most of it or all of it on payroll, you don't have to send copies of canceled checks for rent and utilities, because all you're gonna have to do is just send them your payroll reports over a 24-week period, and it's gonna show that you used all of your proceeds on payroll. So I think that's a positive development. The other good thing is that, remember, 3 weeks ago, we were so worried about the full-time equivalents, and oh my gosh, what happens if the economy is not strong and I don't bring people back? I think they made it much easier for borrowers who got the PPP loans to still get their full forgiveness, even if they don't bring people back. If you have a good reason, like, you were subject to, and I think dentistry is a great example of that. And pretty much every business will probably be subject to social distancing requirements and requirements from local health authorities. But it specifically says that that borrowers who are unable to return to their normal business activities before COVID, to the same levels that they had before COVID, because of all these requirements by the state or local government or their local health department, are going to be able to be exempt from the FTE requirements. Also, if because of the economy and your business is not able to recover, I think, and again, we're going to see more feedback from the SBA on how we're going to be able to prove that. But again, I mean, the general consensus that we're seeing is that Congress, the government, and even the lenders want to see businesses not have to pay back those PPP loans. We're just crossing our fingers that the SBA is going to provide us with easy to follow requirements for documentation and application for forgiveness. Where I see this may become hairy towards the end of the year is probably with tax planning. Because again, Congress intended for the PPP to be completely tax-free. And that was evident in saying that, because normally loan forgiveness is taxable, but Congress in the CARES Act said that forgiveness of the loan is not going to be taxable. But then a few weeks later, the IRS issued guidance saying, well, if you get your PPP loan forgiveness, we're not going to allow the deduction for expenses that were forgiven. I think that goes contrary with what Congress was intending to do. And I know the AICPA is lobbying very hard to get the IRS to revise their guidance, or to get Congress to really make it clear that that was not their intent. And I'm hoping that this is going to be resolved before the end of the year, because I think it would be huge for businesses that are recovering from the impact of COVID and being shut down for 10 weeks to also not to be able to deduct these expenses, because I definitely think that was the intent of the CARES Act. They also will extend the deferral period for making payments, interest and principal payments on the PPP, which is great. It was 6 months, it's going to be extended. And also for those who do not manage to get I don't know how you don't get the loan forgiven, but for those that don't manage to get it all forgiven, you could negotiate with your lender now and extend the term of the loan from 2 years to 5 years. The only thing that has not changed is applying for the PPP loan. So there are still some funds available. And if you have not applied for the PPP loan or have not been successful in obtaining it, you only have until the end of June to apply and get the PPP loans. So if you haven't done so and you think you're going to need it, I would do it. I would do so because the clock is ticking. We're less than 2 weeks away from the end of the PPP festival. And with that, Vijay, do you have anything to add to this? Vijay, we can't.
I have to turn the the mute button off. So thanks again, Basim. No, this was a very informative explanation. Very useful.
Very good. And again, thank you so much for being with us today. And I'm a numbers geek, and I believe in analytics, and I believe in making smart business decisions based on numbers. And I just thank you so much for presenting the data in an easy to understand way. With that, I'm gonna wait maybe for a minute to see if any of our audience has any questions about the recovery or about the PPP or EIDL loans. I don't know if, maybe we should share this with our attendees here, but Vijay, I remember about maybe 7 or 8 years ago, you guys were at 15,000 installation. Now you're at almost 30,000 installations. How the heck did you manage to get so many installations so quickly?
No, thank you. We are adding approximately 25 to 30 new practices a day.
Wow.
And, and it is and it's because we have all these companies which have built applications on our platform, and our platform gets installed because it facilitates. It allows, if you think about it, the dental industry has kind of lived in in many years ago technology. The practice management systems are not very current and so there are all these applications which the dentist wants to use, and we are able to give them that applications working with the practice management systems. And as I mentioned, we are compatible with 96% of the market. And so for example, revenue cycle and reputation management and all these applications can all function because our platform connects. So the doctor doesn't have to worry about manually trying to connect those with their practice, and it's all seamless and automatic. And that's the reason why we are seeing such a fast growth on the new installations.
Yeah, and one thing I still don't understand is that many practices, and even like some of the biggest dental practice management software, they're still using server-based applications, and they haven't, moved to the cloud. I mean, just about every industry has been on the cloud for years, right. And we still. What percentage of practices do you think is still on a server-based practice management software?
92%, 93%.
Unbelievable. Unbelievable.
It's incredible.
Well, we have a couple of questions. The first question is, can we apply for forgiveness anytime between 8 weeks and the end of the year? For that, we're going to have to probably wait for further guidance, not only from the SBA, but also from the individual lenders. I know I got an email from my lender that said, hey, we're working on automating the loan forgiveness process, and you're going to be hearing from us. Again, I think with Congress changing the rules and the SBA changing, hopefully providing guidance on how those rules are going to affect forgiveness, and I'm not here complaining, I'm glad they made those changes. We'll probably have to wait and see, because again, I think most people will probably have spent their money by, I would say, 10 to 12 weeks after they got the loan proceeds, unless they, of course, didn't open their business until last week. The other question is, please review the implications if you receive both EIDL and PPP. Okay, so PPP is a forgivable loan, and again, it has to be spent on payroll, rent, interest, utilities. The EIDL has two components, right? When you applied for the EIDL, you got an advance. That first they said anyone that applies gets $10,000, and then again there was an overwhelming demand. They got like 5 million applications. So far, they only processed 2.5 million. And the word that I hear from my friends at the SBA, they told me that initially, when this happened, they only had 100 people manning that disaster loan department. So you could imagine, you could imagine what was happening. And I don't envy these people, so they had to put limits, and they said, okay, we can't do 10,000 per business. We're gonna do 1,000 per employee with a max or a ceiling of $10,000. And then they also put a ceiling on the maximum disaster loan at 150. So now how do the two relate? Well, what happens is if you got the advance up to $10,000, whatever advance you received, that advance is gonna be reducing your PPP loan forgiveness. So if you had a $100,000 PPP loan and you managed to meet all the qualifications for full forgiveness, but you also got $10,000 from the EIDL advance, the maximum forgiven between the two is gonna be $100,000. So you're gonna subtract whatever, if you have whatever you received from the EIDL advance, you're gonna subtract that from the PPP forgiveness. Now, if you never got anything from the PPP and you only got your EIDL advance, you don't have to worry about that. That advance is gonna be forgiven. I hope that answers your question. And someone is asking, even if the advance was used on a different expense other than the PPP loan, yes, I think that's my understanding. Basically, the maximum that can be forgiven is the amount of your PPP loan, so it can't go beyond that. Any other questions? With that, it doesn't seem like there was more questions. Vijay, thank you again for your generosity and being generous with your time. I thank all the people that were able to join us today. This again was very informative. And until next time, again, thank you.
Thank you again, Basim. Thank you, everyone. Bye-bye.
Bye-bye.